Good afternoon. This is Oliver Sloup, Blue Line Futures, coming to you from the Chicago Board of Trade. Happy Hump Day. Today is Wednesday, May 21st, and there's a lot going on in a lot of different markets, from grains and metals to energies, and some late day pressure in the equity markets. Before we get into what we're looking at and what's crossed our radar here at the trade desk, head over to bluelinefutures.com. If you have not signed up for a free trial of our daily commodity commentary, myself as well as the team in-house put out a lot of great information from everything, grains and livestock, precious metals, energies, etc., you name it. We put out a lot of information each and every morning, and a lot of that information gets updated throughout the trading day on our portal on bluelinefutures.com. So again, if you've not signed up, head over to Blue Line Futures and go ahead and get that done. Now that I got that plug out of the way, I'm going to go ahead and kick it right over to Chief Market Strategist Philip Streible, branch office down in Florida, who I know has a few things on his radar from a wide range of markets, really. Phil, take it away.
Thanks, Ali. I'm Phil Streible, Chief Market Strategist at Blue Line Futures. So if you're going to trade these markets here today, you need to wear your 5-point racing harness and then also have your racing cap on. So looking at the markets here, we do got the gold market punching through the $3,300 mark. And basically what's going on here, you've got this surge coming off of the trend line, and then we've got a little bit of movement upwards because of the fact that we had some verbiage come out between Israel and Iran. There was a CNN report which created some safe haven buying in the market. Now we are seeing bond yields continue to rise here after this week 20-year auction, and that caused some serious gyrations in the equity markets, which had a spillover effect on some of the industrial metals, with copper giving up some of its gains. The dollar index slightly lower on the session here today, also putting a little tailwind behind that gold market. The problem I think though that gold has longer term is that those higher yields are going to catch up to it at some point, but I'm just not sure when here. So I think that the better, more constructive metals to be in are obviously the platinum, the silver, the copper market. Copper needs more of this global recovery, these recession fears to go away. And then you start looking at the silver market taking us right to the altar again here, up at 33.50. This becomes this do or die level for silver, where it's either going to break out to the upside or we might trade back down all the way to 31.50. So, you know, the devil's going to be in the details with a lot of economic data coming out here in the back end of the week. Thanks, Ali. Back to you.
Great stuff as always, Phil. I always appreciate that. If you have not checked out Phil's daily precious metal commentary each and every morning, I suggest getting on that. Great insight, great way to start each and every morning. I like the way you put that about silver, though. Right back at the altar, kind of a do or die area for the market. I've been optimistic on precious metals, gold and silver in particular, for quite some time, and gold has really played out. Silver, every time we get this nice little move higher, I feel like it's time to play catch up with the gold market, and it just ends up falling flat and leads to a little bit of depression. But this time I feel like there might be some different catalysts at play here, especially with what we've seen in the platinum and palladium market over the last 24 hours. I was working with clients over the last day or two talking about the metals work best when they can work together. So if we continue to see this precious metal and industrial metal complex work together, that's what I think could potentially be different this time, that propel silver back above resistance and really gets this market moving sharply higher, and does potentially play some catch up with gold. Obviously, don't expect to see that all at once, but I think over time we can start to develop a trend there for sure. Now, Phil also touched on some good geopolitical headlines that may have been playing a role in price action over the last 24 hours in a wide variety of markets, including that oil and energy complex really since last night's open. So for some more insight on that, I will hand it over to our head of research, Dan White, on what's going on there. Dan?
Hey, Oliver, thanks for having me on. Big friend of the program. So crude yesterday around 5 p.m. Central, right after the close, CNN ran a headline that Israel was planning to strike Iranian nuclear facilities. This caused a sharp rise in crude, about $2 immediately on the reopen. And realistically, reading more into the article, it was kind of a somewhat clickbaity. It cited a lot of old information, potentially some shaky sources. Realistically, it is still a possibility that Israel would strike Iran nuclear facilities, but an attack realistically wasn't imminent or in the works. So this morning at the U.S. Open, there was some selling, and then price kind of leaked until the EIA report around 9:30. And the EIA report came out pretty bearish, one of the more bearish reports we've seen in a while. We had inventory builds across crude, gasoline, and diesel, and the demand that we saw was really a sharp drop, one of the sharpest drops we've seen, and seasonally very low. So a very bearish EIA report from there. Price continued to leak. May have found some support here as we get into the end of the session. We've been looking around that, 61.50, 61.26 level to get some tactical longs. So we'll see how we close out the session here. But yeah, that's kind of the story on crude.
Great stuff as always, Dan. Oil, really an interesting spot, almost kind of in the middle of no man's land. Yesterday's reversal off of that headline news does look a little suspect on the chart, but a lot of that tail left on the upside came on a little bit of a knee-jerk reaction from a headline. So I think that there's probably a little bit of an asterisk next to that bearish reversal, and we're just right back in the middle of the range. So it'll be interesting to see how that plays out. I'm sure we're going to continue to get a lot of geopolitical headlines, as it seems that's going to be maybe a new trend here, especially into what is a long weekend. So prepare for that accordingly. Now, one complex that's been extremely resilient through the week is that grain markets really battling back and getting back to some major technical levels, with wheat being the leader, not necessarily today, but really through the last week. Matty candlesticks a week and a half ago touched on some of those chart patterns that we're starting to see develop since marking that reversal back higher on May 13th, where we had the contract low and then reverse higher. Since then, we've gotten some good fundamental headlines as well to kind of accompany the good technical tailwinds that we've seen. We've gotten some growing concerns over the last week with regards to weather and crops in Russia and China, which has brought us back to some big technical levels for wheat. July Chicago, 560 to 565. That's going to be a huge pocket to keep a close eye on into the back half of the week. This represents a trend line resistance as well as that 100-day moving average. If we can get out above there, potentially things start to get a little bit more exciting with potentially more short covering from funds, which have established a near record net short position here over the last several weeks. It's one of the largest on record. I think it's top 3 or top 4. So something to be cognizant of there, especially with the change in the headlines, maybe trending a little bit more favorable in terms of higher prices. As far as corn and soybeans go, both those markets also performing very, very well. July corn at a bit of an inflection point, 460, really a kind of a do or die area. We talked about that do or die area for silver. July corn, I think, is there too with 460. Being an inflection point, really going back all the way to last June. If we can see consecutive closes out above there, I think there's more potential in that market as well. Fundamentals have been very strong in that market, but the technicals and money flow really hasn't followed the strong fundamentals, so there's a little bit of a caution flag. It'll be interesting to see how we close this week out on that front. And then over on the livestock side of things, a little bit of a mixed day. We saw live cattle higher. Rumors of cash trade continuing to firm help live cattle futures. On the other side, feeder cattle a little bit softer. May goes into expiration tomorrow, and May will have to expire with the index. And then past that, we're going to be looking at the August futures and obviously September as well. So a lot of moving pieces going on there with the cattle on feed report on Friday. The big question is, with a cattle on feed report Friday after the close and a long weekend, will the market even remember what the report said when we come back to trading on Tuesday? To be determined, but nonetheless, a lot going on here as we officially enter the back half of the week. If you have any questions at all, want to talk to the trade desk about markets or strategy, we are ready, willing, and able to help, so do not hesitate to reach out. Appreciate you tuning in. We'll talk to you tomorrow afternoon as well. Remember, trading futures and options involves substantial risk of loss and is not suitable for all investors.